Introduction to accounting. Introduction. In this module, you will learn about what accounting is, why people in business need to understand accounting, what businesses use accounting for, and the basic financial statements used in these businesses. Topics to be covered. What is accounting? Accounting and bookkeeping. Who uses accounting information? Accountability in accounting. Financial statements. How different business entities present accounting information. What is accounting? Accounting's goal is to provide you with the knowledge that will assist you in making sound financial decisions. The accountant's role is to provide the data necessary to operate a company as effectively as possible while optimizing income and minimizing costs. Accounting is essential in all types of companies. The same basic accounting principles are used for a one-person company and a multinational corporation. Accounting is regulated, and it affects the taxes, and even the government is influenced by accounting. The language of business is accounting. It is the method of capturing, categorizing, and summarizing economic activities through specific records or financial statements. Accounting, like every other language, has its own set of terms and laws. You must first learn this language to be able to interpret and use the data accounting provides. Understanding the fundamentals of accounting is critical to business performance. Accounting and bookkeeping. Bookkeeping processes and bookkeepers keep track of and report company transactions, which are then used to produce financial statements. The majority of bookkeeping processes have been systematized and can now be performed by computer programs in many cases. While bookkeeping is an essential part of the accounting process, it is only the beginning. There is no specific requirement for qualification to work as a bookkeeper. Accounting is the method of creating and reviewing financial statements based on transactions entered into a bookkeeping system. Accountants typically have a bachelor's degree in accounting and have passed a technical exam such as the Certified Public Accountant Test, Certified Management Accountant Examination. Accounting encompasses more than just bookkeeping and the recording of economic data. It also includes summarizing and reporting that data in a manner that helps a company make decisions. Who uses accounting information? Accounting is vital in the business world because it helps people make crucial decisions. The more complicated the decision, the more knowledge is needed. Individuals and businesses need different types of data to make business decisions. Managers in a company use accounting data regularly to make decisions, even though the majority of these managers are not accountants. These types of decisions would be complicated, if not impossible, to make without the proper accounting data. Bankers constantly use accounting data. They are in the business of looking after your finances and making money from them, so they must make the best decisions possible. Accounting plays a critical role in their decision-making. At the domestic level, the key requirements are described in Statements of Standard Accounting Practice, SSAP, and Financial Reporting Standards, FRS. Statutory financial accounts are now prepared in accordance with the requirements of SSAPs and FRSs, and these standards apply to all companies and government bodies. In the UK public sector, but not the private sector, accounting practices are also determined by guidance issued by the relevant supervisory government department or agency. Accountability in accounting. Certain members of the local or national community may be interested in a company's financial statements. The effect of management's financial decisions on unions and other workers could concern labor organizations. Local populations are concerned about how a company's financial actions, such as layoffs or plant closures, would affect their residents. When the economy becomes more complex, so do business transactions, and the process of reporting and making them understandable to different users becomes more complicated. Individuals, administrators, and company owners who make decisions based on the information provided by accounting records benefit from a solid understanding of accounting. Financial statements. The basic financial statements include the balance sheet, the income statement, the statement of cash flows, and the statement of retained earnings. By releasing structured reports known as financial statements, accountants provide information to people both within and outside the company. At least once a year, financial statements are typically released. In some instances, they are published quarterly or more frequently as required. The preparation of financial statements is governed by a collection of guidelines known as Generally Accepted Accounting Principles, GAAP. Generally Accepted Accounting Principles has been defined as a set of objectives, conventions, and principles to govern the preparation and presentation of financial statements. How different business entities present accounting information. Proprietorships are businesses with a single owner. These types of businesses tend to be small retail businesses started by entrepreneurs. Only the company reports are used in the accounting for these proprietorships, not the proprietor's financial records. Partnerships are similar to sole proprietorships, except that there are 2 or 3 owners instead of 1. The majority of these companies are small and medium-sized. However, certain exceptions exist, such as major national or multinational accounting or law firms with thousands of partners. Accounting regards these entities' records as independent and distinct from those of the individual partners, much like sole proprietorships. Finally, there are corporations. 1 or more stockholders control these. These shareholders may or may not be involved in the company's management. Many of these stockholders are ordinary people who have invested capital in the business through stock purchase. An individual becomes a stockholder and an owner of a corporation by purchasing shares in the company. Depending on the form of stock acquired, stockholders may or may not vote in the company's long-term planning. However, they do not have decision-making authority in the day-to-day operations simply because they are stockholders, owners. These investors, or stockholders, are similar to the bankers who provide financing to a sole proprietorship or partnership. These bankers have a financial stake in the company but no control over regular management decisions. In general, bankers have a non-managerial interest in the business, much like stockholders who have invested capital in the company. Like that of the other 2 forms of business entities listed here, the company's financial records are kept separate from those of the individual stockholders or shareholders. Since a proprietorship has a clear capital structure and just 1 owner, its financial records are less complicated than those of a company. In the case of a corporation, some stockholders buy a piece of the ownership of a company by buying stock. Summary. The accountant's role is to provide the data necessary to operate a company as effectively as possible while optimizing income and minimizing costs. The language of business is accounting. Accounting encompasses more than just bookkeeping and the recording of economic data. Investors, or stockholders, are similar to the bankers who provide financing to a sole proprietorship or partnership.